Gold is the ultimate money. I know it, you know it, our followers know it, and the banks know it. Now, who else knows it? Well, Wall Street's probably known it for a great long time, but they've never stated it before. But what happened last year? You had stalwarts on Wall Street that used to kind of make fun of guys like you and I. And now they're saying it should be 20% of your portfolio, 10% of your portfolio. Institutions should be involved, pension funds should be involved. 401ks, defined benefit programs can add silver and gold. And now you've got silver, switching to silver in this critical minerals list. So there are so many factors. And the last factor is what happened at the end of 2025. And it was a paradigm shift. What took place is something that Peter Schiff, myself, and many others in our arena have said, that once the physical metal took precedence over the paper paradigm, we would have a brand new market. It did. And we had it for several months based primarily on commercial bars, which are backed by paper, being added to industry, perhaps private hands, both, to take control of the price. So we had a price discovery going on for a very long time. But as that physical methodology did take control for quite some time, the paper paradigm kept building and building, which you already addressed earlier in our first question out of the box. But nonetheless, now we have a struggle. Who's going to win the battle? Well, the physical market will win the battle. And that's why I'm so bullish that we still have not ended this. It's not a 1980s. Hunt brothers, get brought up before Congress and have to testify, and they're banned from ever trading silver again the rest of their lives. And there was too much paper in that system. There's probably too much paper in this system. The problem this time, different than the Hunts, is that the physical demand is so strong, unabating. And rules are changing in China, as far as I understand it, as far as how much leverage you can use at the downside. So there's a lot of factors this time that weren't around. And the last one is very obvious, but it remains to be stated. You had a Hunt brothers and some Saudis involved in the 1980 market. Today, it's a global market. Solar, AI, EVs, all electronics are leading that market. It's a 65% demand that isn't going to go away. Whereas if you look back in 1980, I forget the exact number. I know that in 1990, it was about 30% of the market. Now it's double that amount at least. And the supply chain was about 500 million ounces annually. And now it's about 1 billion ounces. So it's twice the demand on twice the amount produced. So that's a lot more metal that's demanded today than there was back 25. Back in 19. I had Mike Dorenzo, the CEO, president of the Silver Users Association, on our mastermind. And I asked him that question. He kind of picked up his voice. He didn't yell at me, but he said, there's nothing that says they have to stockpile it. Then he kind of calmed down. And, I believe that they will. And he said yes, that, just because it doesn't say they have to, he thought that they would as well. But the question becomes how soon and how much, So they're going to grab, 100 million ounces in a year's time, or they're going to grab 30 million ounces in 3 years' time. We don't know the answer to that. But I do think that they will certainly stockpile silver. I think that may lead to other nation state asking the same question. Well, if it's strategic to the U.S., is it strategic to us? So there could be other nation states that are saying, hey, wait a minute, we love gold for monetary purposes, but we need silver for strategic reasons. Maybe we should jump in there as well. Just for final statement on that whole idea, the strategic stockpile was 139 million ounces in 1985. They used that to make the Silver Eagle or coinage program. And it was depleted over several years, and then they had to go to the open market to buy silver to make Silver Eagles from that point forward. I'm not saying that they're going to try and get 140 million ounces, but maybe they're going to try to get more. I don't know. I would say round numbers, I would think at least 50, if not 100 million ounces. Now, again, how fast, because they do it over 10 years, it's really not going to put a lot of pressure on the market. It'll put some. But if they're trying to get 50 million ounces per year for the next 2 or 3 years, that may be enough. We just don't know. It's all markets move at the margin, but the more demand there is, and for physical, the more the price control goes back to the physical side. And last thing you didn't ask is that in the United States, I think it was February 1st, Kai, the defined benefits program, in other words, called 401ks in the United States, can add, not necessarily they will do it, but some will, gold and silver as an option for the savings plan. So that is a big market. These are big corporations that have these pension programs for employees. I mean, we're talking like Ford Motor Company, General Motors, 3M, Dow. I mean, all these big corps that have lots of employees that have the wherewithal to do these type of things. So that's a lot of pent up demand that someone that's worked there for 20 years, 30 years, 5 years, just entering the workforce says, wait a minute, my option stocks, bonds, money market, or gold and silver? Hey, I want 10% of my program going into gold and silver. Well, multiply that times the amount of people that would be steadily, consistently buying gold and silver month over month, year over year, and what that would add to the physical demand. I think it's important to bring that to the fore. Being so bullish silver for so many years, but more data, more information. You've got to do the late great Ayn Rand, check your premises. One of my premises back 25 years ago, and probably for the first 10 years, was, silver is a monetary metal, and it still is, but less and less a monetary. So I put out a guidance outline for my paid subscribers about silver going to 100 and what you could do to filter out at a profit. And also on the gold silver ratio, and I started that at 60 and I went to 50 and I went to 40, went all the way down to the possibility of maybe 20. But the market knows more than anyone. And if you do the guidelines that I outline, not a lot, but a fair amount of my premium members did swap. They swapped gold in for their silver at the 50-to-1 ratio. Well, they look like a genius today. Will they look like a genius a year from now? I don't know. But the way I set this up, they could swap back if they wanted to. I mean, let's say the ratio got down to 80-to-1, or we could say up to 81, depending how you look at it. You might go, wait a minute, I made this much on my swap. I'm going to swap back gold to silver because I think David's right. I think it's going to get below 50 again. I'm not trying to be a trader here, Kyle. I'm suggesting is that you have to have a plan. If you sit there and think that, I'm going to catch the top on a whim because I'm emotionally attached to my investment that feels like it's the top, good luck, especially in this kind of a market. And the last thing I want to say, because I think it's critical, is that, and I have to take a deep breath, I'm not trying to be dramatic, but if we do go to a hyperinflationary environment, the last thing you want to do is sell your metal. It doesn't mean you got to hold it all the way up. I mean, if you bought silver at 50 and went to 100 and you sold half and have a free trade, in other words, all the silver you're now holding is sitting there for quote unquote free because you got your original capital back, then why not, be smart with it? So there's lots of ways to approach markets, as you know, but I think that, again, you must have a plan. If you don't have a plan, you're going to get hung up in the emotional wave, because once silver hits, let's say 150, there'll be people saying it's going to 300. And maybe they're right. And if it hits 200, there'll be people saying it's going to 1,000. I mean, there's people out there saying that now.
It's hilarious to be talking about precious metals as crashing, like all the way down to 4,900 for gold and 72 for silver. Those would have been paradise prices just a couple of years ago. So it's a measure of how wild the precious metals bull market has been, that it feels almost catastrophic to be at these, historically incredibly high prices, just much lower than in the last few months. And first of all, it's to be expected that when you have a huge run like gold and silver have had in the last year, that you get a correction. That's just normal. There's an awful lot of people with profits to protect, and selling is one way you protect your profits. So a correction is to be expected in this kind of a bull market, and they happen in all bull markets. And you've got the ever-present manipulation going on out there, where COMEX raises the margin requirements to an unreasonable level, and that pushes down the price, or that dries up activity in the futures markets and causes the price to go down. That's happening too. And now, right this minute, this week's crash is mostly because the Chinese markets are closed because of a holiday, and they don't reopen again until the 24th. Today is the 17th, and they open again in 6 or so days. And that just leaves the US-based futures contract speculators to play in this market, and they've decided to smash gold and silver, as we expected, because the COMEX and the other exchanges here are running out of physical silver, so they really need to strangle activity, especially the kind of activity where people are standing for delivery on futures contracts. And so this is a chance sent by heaven for them to lower the price of silver to the point where it's not an